Just imagine this. You are an investor who trades crypto regularly on an exchange called ONUS, a Vietnamese exchange that has been operating from 2020 up to now. Then this is what you have probably been going through over the past few days. You open the app every day, check whether you are up or down, watch the price go up and down, enter trades, close trades to take profit, cut losses. And then a few days ago, just like usual, you logged in to check your account and see whether you were in profit or loss, and suddenly noticed something very interesting. Login failed. Wait, what is going on here? Probably just a temporary system error. A few hours later, it will be back to normal. But then a few hours passed, and everything was still exactly the same. At that point, it no longer looked like an ordinary technical issue. More and more news started coming out, and some people began saying that the people behind it had been targeted by the authorities. A few days later, the mainstream press started reporting all at once that Vuong Le Vinh Nhan, Tran Quang Chien, and their accomplices, the people behind the ONUS exchange, had been taken away by the police. And you, along with millions of other users, were left staring at your assets stuck inside the system, with no idea when you would be able to withdraw them, or worse, whether you would ever be able to withdraw them at all. That was when a lot of people suddenly realized a pretty bitter truth. What you always thought was your money was actually just a number sitting on a screen. And once the door got locked, there was no way for you to reach in and take it out. But the scary part is not just that people cannot log in. The scarier part is that once people started looking back at the whole game, they realized there were far more disturbing things underneath it all. Listen to this.
As of now, the ONUS exchange has millions of accounts. In order to manipulate the value of the cryptocurrencies listed on the ONUS exchange, the suspects interfered by creating fake buy and sell orders that caused investors to lose money.
It would make the price go up or down, depending on whether users were buying or selling. As for adjusting the price ratio, Mr. Chin was the person directly making those changes.
Pretty wild, right? That means if you were a persistent investor who had been trading for around 6 years, you may have been quietly losing money year after year. But you thought you were losing because you invested badly, or because your market analysis was weak. But that may not have been the case at all. No matter how skilled you were, you still could have lost anyway, simply because if the exchange owner wanted you to lose, then you were going to lose. It is no different from a rigged gambling game. If the house wants even, it gets even. If it wants odd, it gets odd. How are you supposed to win? Now you see it, right? It means you did not have to wait until the exchange collapsed to be scammed. You may have been getting scammed from the very moment it started operating. It was just doing it more quietly, more subtly, in a way that you did not notice. It was so subtle that for more than 6 or 7 years, almost everyone kept praising it as reputable, powerful, trustworthy, the #1 exchange in Vietnam, while very few people realized they had been getting drained the whole time. So how did they do it? Think back to all the things they gave you. It all sounded very professional. Technical analysis, capital management, stop-loss orders to protect your assets. Traders got excited, thinking they were using professional tools, trading with structure, with a real plan. But sadly, in an arena where the other side can see your entire hand, the more organized you are, the easier it can be for them to take you out. In derivatives trading, basically the futures-style trading on ONUS, traders often place stop-loss orders. That means you set a certain level in advance, so that if the price moves too far against you, you cut the loss, and at least stay alive. It sounds very reasonable, very civilized. However, exchanges have complete access to all the data on those stop-loss points for every trader. So for exchanges that behave like thieves, they can use trading bots working together with the exchange to receive that data in real time. When a trading bot detects that a large number of stop-loss orders are concentrated around a certain price zone, the rest is not all that complicated. All it takes is one quick wick, pushing the price sharply up or slamming it down for a few seconds, just enough to pierce that exact zone. Then a whole series of stop-loss orders gets triggered automatically, and anyone using leverage gets liquidated. Once the crowd has been wiped out, the price snaps right back to where it was, as if nothing ever happened. The result is that investors get kicked out of their positions, take losses, and lose money for nothing, while the overall market trend has barely changed at all. That is why, when you look at the big picture, the price chart on exchanges like this can still appear to follow the broader market trend. Still rise and fall with Bitcoin, with money flow, with crowd psychology, just like normal. And that is exactly what makes the problem so hard for many people to notice. Oh, and yes, there is also something called the mark price. That is the price used to calculate liquidations. On large exchanges like Binance, for example, the mark price is usually calculated from multiple sources to reduce the risk of traders getting unfairly wiped out by one abnormal price spike. But the problem is that the way mark price is calculated on many exchanges is pretty vague, or based mostly on internal data, so it stops being a tool that protects anyone. It just becomes a nicer sounding name for a system that legitimizes making users lose money. But why would an exchange want you to lose? What is the real motive? Because a lot of people still think an exchange is just a middleman. Whether traders win or lose, the exchange still collects fees, so why would it bother interfering? That is true, but only when the exchange operates under the A-book model. With A-book, the exchange only acts as an intermediary. User orders are sent outward or matched with other traders in the market. The exchange makes money from trading fees and the spread between the buy price and the sell price, so whether you win or lose, it still gets paid. What it wants is for you to stay alive and keep trading. But with an exchange operating under the B-book model, it is completely different. In that model, the exchange is no longer just standing in the middle. It is standing directly on the other side of your trade. When you buy, it sells. When you sell, it buys. And at that point, your loss becomes its profit. Now everything starts making a lot more sense. Why is there an incentive to hunt stop losses? Why is there an incentive to create long wicks? Why is there an incentive to fake liquidity or adjust prices internally? The answer is simple. If the exchange is standing on the opposite side of the trader, then the more traders get wiped out, the more the exchange benefits. So what about other exchanges? Are they safe? You might think this whole situation is only happening with ONUS, some exchange far away on the other side of the world, so what does that have to do with you? Not necessarily. For all you know, there may be plenty of other exchanges out there, and maybe the very one you are using is operating in a similar way. Because if even a platform that had been praised by an entire country for years could still leave its users in a situation like this, then who can say for sure that other places are completely free of problems? In my opinion, there is still risk. It is just that on the bigger exchanges, everything is usually done in a more polished way, covered up more carefully, and built with more technical layers, so it is harder for users to see what is really happening. Even Binance, a name that is almost the biggest in this entire market, is not exactly beyond suspicion. In 2023, the Securities and Exchange Commission sued Binance and laid out a whole series of allegations, including claims that it had misrepresented its surveillance and trading control measures on Binance. US. That same year, the Commodity Futures Trading Commission also sued Binance over violations related to its derivatives business. And by the end of the year, there was a ruling requiring Binance and its founder, CZ, to pay very large penalties and restitution. Of course, these are legal issues and allegations from regulators. That does not automatically mean every trade on the exchange was fraudulent. But it is still enough to remind us of one thing. If even the biggest exchange in the world is not guaranteed to be completely clean, then what makes small retail investors think they can afford blind trust? And for derivatives traders, the biggest nightmare is still the same. Those candle wicks that show up at just the right moment, almost like they know exactly when to hit your stop loss before turning back around. Of course, just because you see a wick does not mean you can instantly blame the exchange, because the crypto market is already extremely volatile by nature. But it is also impossible to deny that futures is a game filled with uncomfortable gray areas. The exchange has more data than you do, and the market makers are faster than you are. In other words, you may still be trading in a real market, but that does not mean the playing field is fair to you. What makes big exchanges like Binance or BingX different is that they usually build more technical layers to reduce the feeling that users are getting unfairly skewered. For example, they use mark price, meaning they do not liquidate you based solely on the last traded price on that one exchange. Instead, they use a more stable reference price, pulled from multiple sources. Put simply, they understand that users are terrified of abnormal price spikes, so they create an extra cushion to reduce that risk. On top of that, they also roll out more tools to make users feel safer. Things like proof of reserves, protection funds, or features designed to reduce slippage. But let us be clear, having those protective layers does not mean the risk disappears. Having mark price does not mean you will never get stop hunted. Having proof of reserves does not mean the assets on the exchange suddenly become your personal wallet. And having a protection fund does not completely eliminate conflicts of interest if the operating model behind the scenes still includes BBOK or a hybrid structure. That is why Binance, BingX, and many other major exchanges should not be casually lumped together with ONUS. They are bigger, more sophisticated, and have more technical safeguards in place. But that still does not mean futures traders should trust them completely. In this market, the more leverage you use, the easier it is to get wiped out. The thinner the liquidity, the easier it is to get stop hunted. And the more blindly you trust an exchange, the more dangerous it becomes. Crypto can still be traded. Futures can still be played. But trust should always have limits. Do not look at ONUS and assume every exchange is a scam. But also, do not look at a big exchange and assume you are in some perfectly clean and honest environment. And there is one very important thing I think all of you should remember after this whole situation. Never let all of your assets sit on a single exchange. If you are planning to hold for the long term, move them into your own wallet so you keep control yourself. And if you are going to be in this market at all, always invest only money you are prepared to lose. It sounds old and cliche, but when something actually goes wrong, that is when you realize it was never just a throwaway line. I even saw people sharing that after the ONUS collapse, they heard the police calling on victims to come forward so they could be guided through the process of recovering their money, but some of them had lost so much that they did not even have enough money left to travel to Hanoi and file a report. Do not let yourselves end up in that same situation. Wishing you all smart investing. Do not forget to subscribe to the channel for more important updates about the crypto market. See you again in the next video.